Most people probably don't realize just how crazy this week is going to be. We still have a lot of big earnings and huge economic data coming out. Based on what we seen on Friday, a correction-like event, well, could start this week. And that's no understatement. When we go over the economic calendar, you'll see exactly why I'm saying this. Now, in the grand scope of things, you are probably a Tesla stock investor among an investor in a lot of other companies. Some people are all in on Tesla, some people invest in other things. This video is applicable to every single one of you watching it because Tesla will move this week based on this data. This data could really solidify whether the Fed is going to wait a lot longer to start cutting rates or rate cuts that could be coming sooner than expected. There's actually something beautiful about our markets. Going from pricing in 7 rate cuts and the first rate cut to start in March, now we're expecting the first rate cut in June and only 3 rate cuts. If we do see data that suggests the Fed should be cutting rates sooner, the markets could start to price in the first rate cut to happen maybe in May. And if that happens, that could be really good for Tesla stock. Overall, we'll get into all of this information you need to know and go over a price prediction for Tesla stock by the end of this week. Hit the like button, subscribe to the channel, and let me know what you think about this information. Before we get into any of that juicy data coming out this week or the earnings, well, I do want to go over the option activity in Tesla stock because what are big money, hedge funds, institutions, money managers doing in their Tesla positions? As I reported in the video earlier and over the weekend, you did see about 2 times as many calls than puts for last week's expiration. About 66% of the open interest was calls and 34% was puts last week. For this week, it's almost exactly the same. 66% open interest to the call side and about 34% open interest to the put side. Again, 2 times as many calls than puts for this Friday's expiration. On Friday, you seen volume for this Friday's expiration. Sounds confusing. It's not. Of almost 69% calls and 31% puts. You also seen a positive order value from hedge fund and institutional trades of 65%, and they were not afraid to load up on bullish positions expiring by this Friday. You had 583 orders totaling $305 million. Again, from hedge funds, institutions, money managers, big money investors for Tesla stock. And if we take a look at the bubble chart here, what do you notice? By this Friday, there is a lot of money betting on a bullish rally for Tesla stock. Now, on Friday alone, you had 57,000 contracts trading hands via volume for the 195 call. 57,000, that's huge. Open interest of 6,500. 205 call had 32,000 for volume and 15,000 for open interest. The 197.50 call had volume of 27,000 and open interest of 14,000. But take a look at this. The $200 call had open interest of 20,000 on Friday with volume of 115,000 on Friday. That is insane. Considering Tesla stock is at $191, that would imply upside of about 4.20%, 420, wink wink, by the end of this week. Now, if you actually take a look at the option chain for the March 1st expiration, you only have about 20,000 contracts that are in open interest for the $200 strike. Coming tomorrow morning, this will update and we will know how much of the 100,000+ contracts that were traded on Friday actually were held in people's brokerage accounts, because the volume just takes into consideration. Let's say you buy a call and you sell a call. I mean, that's 2 represented in the volume. If you see that happen, 100,000 times, 100,000 for volume, that would imply maybe 50,000 people bought and sold an option on Friday. Now, if let's say, 100,000 was for volume around the $200 call and people just bought, right? That could be 100,000 options that could be represented in open interest. Now, I wouldn't be surprised if this number makes its way to 30,000, 40,000 potentially. That could set you up for a very large rally, because if Tesla breaks above $200 and let's say the open interest is 40,000 coming tomorrow morning, that would represent about 4 million shares market makers would have to buy at the $200 call, let alone the almost 15,000 for open interest at the 197.50 and the 6,500 for open interest at the 195 or 3,500 for the 192. So based on what we're seeing right now, that's 2 million, 1.5 million, 650,000, and 350,000 shares market makers would have to buy in Tesla stock if Tesla just made it to 200. And I'm sure these numbers are going to look much bigger by the time we open Monday morning. Just to give you a reference of how many shares, market makers would have to buy if Tesla even rallied 4% by this upcoming week. That could push Tesla stock maybe, just maybe, to that gap to fill level, which is about 210. But more on that later on into this video. Hopefully by now you understand how bullish people really are right now on Tesla stock, or I should say big money. If you look at sentiment from retail investors, it's not as bullish. And I find it remarkable that retail is now bearish on Tesla. Hedge funds and institutions are getting a lot more bullish on Tesla. Something to consider. Now let's get started in today's video. Beyond just Tesla, the option activity, and this disparity between bearish retail and bullish hedge funds and institutions, let's take a look at the earnings calendar, because a lot of people think earnings season is over with, but that's far from the truth. That's an outright lie if people say that. Tomorrow morning, you have Li Auto that reports, Domino's, and those are the two notable names. Monday and after hours, Unity, Zoom, Workday, Hims, Hers, iRobot, Car Gurus, and Heiko. Tuesday pre-market, Norwegian Cruise Line, AutoZone, Lowe's, Lending Tree, Cracker Barrel, Macy's, and Scotiabank. Tuesday after hours, Devon Energy, First Solar, Cava, Array Technologies, Beyond Meat, Splunk, Lemonade, and Virgin Galactic. Wednesday pre-market, Baidu, Novavax, Advanced Auto Parts, TJX, ACM, TG Therapeutics, and some other names. Wednesday, that's going to start, I guess, I'm going to call it your AI earnings of this week. You have Marathon Digital. You have Snowflake, Salesforce, AMC, C3 AI, Paramount, Okta, IONQ, and Duolingo. Thursday, pre-market, Celsius, Best Buy, Kronos Group, Polestar, AB InBev, Bath & Body Works, and Six Flags. Thursday after hours, Zscaler, SoundHound, Fisker, Dell, Autodesk, Hewlett-Packard, Viva, and Elastic. Friday pre-market, you have Plug Power and Fubo TV. Now, Zscaler is going to be an interesting one to watch, because Palo Alto, we had one put on that, bought that for $60, and that thing turned into $2,500. That was a huge move we seen last week in Palo Alto to the downside. Does Zscaler suffer the same fate? Definitely something to be watching for. Zscaler and SMCI, just so you guys know, they have a relationship, a partnership, so that could also in sympathy move SMCI, but we'll see. I wouldn't get too carried away with that. Now, Zscaler, Dell, NVIDIA actually referenced Dell in their earnings as someone that, in regards to their data center, kind of growing that down the line, they referenced Dell, which was interesting. Dell doesn't talk much about AI, but their data center business could start to be a little bit more important. Salesforce and Snowflake, as well as C3 AI, those are your big quote-unquote AI names. Now, I think that's important because your AI trade is the thing that is keeping the markets together at this point. I have talked about this plenty of times before here on the channel. This is the dollar. Now, when the dollar rises, the S&P, the SPY index, typically falls. So this was the Rona. You fell, the dollar fell. No wonder stocks did well into 2021 and late 2021. The dollar started to rise. Small caps, mid caps got hit first. Inevitably in 2022, the dollar went crazy to the upside. and stocks fell, right? The Nasdaq was down like 38% in 2022. What happened? The dollar fell. In 2023, what did well? Markets did well. Big tech did well. S&P did well. And then what happened? By July, this is more recent times. By July, what happened? Take a look at the S&P 500 or SPY. What happened in July? You peaked out. You started to fall. You actually fell 10.5%. This was a 10.5% correction in our markets from July through October and really to about the beginning of November. What happened with the dollar? The dollar rose about, let's see the actual percentage here. The dollar rose about 8% or so, give or take, from the lows to the highs. Okay, fine. Markets fell 10%. Then what happened? The dollar fell from, about the lows, right? The 10.5% correction lows. The dollar fell all the way back down here. What happened? You've seen a broad-based rally in our markets. Stocks did well. And the dollar fell all the way through until the start of 2024. What happened in the start of 2024? One, I'll tell you, Tesla stock started to do poorly. As soon as the dollar hit its low and started to rally, literally on December 28th. December 28th was the high for Tesla. Tesla fell 3% that day, and you were at $260 or so, $265, and it's been down ever since. And the dollar's been up ever since, right? So the dollar's been going up in 2024. Small cap, mid cap stocks largely have done poorly. The S&P and the Nasdaq have done well. No regards for the dollar going higher. Don't even care at all. But when you look under the surface, it's a different story. If you take a look at the percent of stocks above their 50-day moving average, what happened? On December 28th, the day the dollar started to go higher, you were at 86%. You've fallen ever since then, down to where you are now at about 51%. 51% of stocks are above their 50-day moving average. That is over the prior 50-day period. So if you're lower than your 50-day moving average today, then you're lower than basically you have been over the past 50 days. That means stocks are in a decline overall. So if your portfolio is not feeling that great, if you're not in these AI stocks, well, that's why, because the dollar's been rising. You've went from pricing in 7 rate cuts to 4 rate cuts. And that's why I am expecting this week you could see a big move, potentially to the downside. Potentially a catch up in our markets, because what happens here, just to put this in English, is either the S&P falls and matches up and, makes this correlation with the dollar, come true, right? Which to me suggests, just looking at this, 8% rise you've seen the dollar back here in July through October that caused a 10% drop in the S&P. You've seen about a 4% rise in the dollar recently since the start of 2024. That would suggest that maybe 5% of downside you should be seeing in the S&P right now. Either this week, you get the S&P falling, and your small mid-cap stocks, they're going to fall, potentially rise even as the S&P or the Nasdaq falls, or you're going to see your broad markets kind of rally here. And you are in this market environment where good news is bad news is good news to a certain extent. Bad news is only good news if it pushes the Fed to cut rates sooner. And if it's not that bad. If it's really bad and we're like, oh shit, we're heading into a recession, bad news will not be good news. Bad news will be bad news. And I think ultimately, if you are an investor, you have to think bad news is still bad news. Bad news is not good news. The markets might take that as good news because that means, again, the Fed might start cutting rates sooner, but bad news will always be bad news. And we're probably expecting some bad news this week. But nonetheless, to my point, if Snowflake, Salesforce, C3 AI, if they're not seeing some AI revenue, if they guide lower like Palo Alto did, that could put a damper on your AI trade. I think ultimately the big day to watch is March 12th when SoftBank can sell their ARM stake. And when SoftBank sells their ARM stake, that's going to put a lot of pressure on your other AI stocks. March 12th is also the next time we get your CPI report. So March 12th is going to be a huge day for the broad markets. If you don't see a pullback by then, that's when around that time period I would expect to start seeing some weakness in our markets. With that being said, this week you're going to have some massive volatility. Tomorrow morning, new home sales come out at 10 o'clock in the morning, and Dallas Fed Manufacturing Index at 10:30 in the morning. Tomorrow morning is going to be by far the quote-unquote chillest day that we're going to have this week. And you just need to get ready for the rest of the week, because Tuesday you're going to get durable goods orders month over month. And let me tell you right now, the markets might rejoice if we get a number that's negative 4.8%. month over month, but that is not good news if we get that number. That means you're quite rapidly potentially heading into recession. Why? Because last month was 0%. So if you're looking at month over month, not year over year, month over month, and last month was 0%, and we get negative 4.8% compared to last month's 0% number, that means you're net negative down 4.8%. That's not good. It would be a different story if we were up 5% last month for durable goods and then, fall 5% the next month later. That would make sense. That's a bad number. That will be one thing that could affect your GDP estimates for Q1, the current quarter that we're in. Estimates have went from over 4% to about 2.9% now. And if GDP does fall, if the estimates for GDP fall, then I would expect, the Fed will cut rates sooner. But is that good? Really? Is that really good if your GDP is, going down towards recessionary numbers? I don't think so. So that's the big data that we have on Tuesday. S&P Case-Shiller home price month over month expected to fall negative 0.1%. Last month was negative 0.2%. So that would be good. I guess just to continue to see month over month declines in your home prices. Could be good for housing inflation, but I think really housing inflation comes down to the Fed. If the Fed lowers rates, housing inflation will fall because people can refinance their homes and charge less for rent. When mortgages are this expensive, people are not going to lower the price of rent. They're not going to stop raising rent. The Fed's retarded for thinking that that's actually how housing inflation works. Housing inflation will not fall until the Fed cuts rates. I'm a landlord. I own rental properties, 3 of them. I'm not going to stop raising rents or lower rents unless, one, you are a fantastic tenant, you do not cause me problems or headaches, and you only bother me when there is things you need to bother me for. You take care of the yard, you take care of everything that you need to in the property. Then I probably won't raise rents on you. And there's only 1 out of 3 that are like that today. The other 2 properties get their rents raised because it's a bit of a headache nonetheless. But if rates come down and I can refinance that first property that I bought in 2019 that still has a 4.5% mortgage rate on it, I might, just keep the rent the same or charge less depending on what I could refinance it for. Maybe a topic for another video, but some secondary data that will be coming out on Tuesday, 10 o'clock in the morning, CB consumer confidence, as well as Fed bar that will speak at 9:05 in the morning. Richmond Fed manufacturing shipments, Richmond Fed services will be coming out at 10 o'clock in the morning as well on Tuesday. On Wednesday, probably the biggest data this week, GDP growth rate quarter over quarter, second estimate for Q4, expected to come in at 3.3%. Last month was 4.9%. So that would be quite a downwards revision to GDP for Q2. Again, that might start to price in the first rate cut to come in May instead of June, but that's just not good overall for the economy. Could give Tesla stock a boost in the meantime. Now, wholesale inventories month over month as well. Advanced numbers for January will be coming out at 8:30 in the morning. Real consumer spending quarter over quarter, second estimate for Q4. All of that will be coming out at about 8:30 in the morning on Wednesday. Fed Bostic, Fed Collins, and Fed Williams will be speaking in the 12 o'clock lunch hour on Wednesday as well. And they're going to be talking about the data that we get on Tuesday, durable goods. They're going to be talking about the GDP numbers that we get on Wednesday. Now, the Fed might also know Thursday's data on Wednesday. So you want to watch these 3 Fed speakers if they give us any insight to what the PCE report could look like on Thursday. Now, I stand corrected. GDP and PCE are going to be probably equally as important in regards to Fed policy But this is where things get really rough, and it really throws a wrench in everything, because if you're seeing the economy starting to turn down now, and that's what the data is forecasted to show this week, but you're also seeing inflation ramping up, that's called stagnation, my friends, and that is, or stagflation. That is kind of the worst scenario you could be in. High inflation, low economic activity, low economic growth. PCE, core PCE price index month over month. You're expecting this to be 0.4% positive. Last month was 0.2%. 0.4% times 12 is 4.8% annualized inflation. If you come in at 0.5%, you're going to be at 0.6% annualized PCE. The Fed is nowhere close to cutting rates if we get a 0.4 or 0.5% number. 0.3%, 3.6% annualized, not great, but maybe you could justify the Fed, slowing down a little bit, especially if GDP and durable goods and all of your other data comes in weak. But gosh, that's setting you up for a brutal day on Thursday if core PCE comes in at 0.4 or higher. Personal income month over month will be coming in roughly 0.4% as per the estimates. Last month was 0.3%. I don't think this is as big of a deal, but if you do see wages continuing to grow, companies will continue to raise prices. Wall Street is not going to say, hey, yeah, we'll give you some margins. Employees, we're not going to raise prices. That's just not how things work. If people are making more, prices are going higher. Bit of a problem. Maybe a small scale wage price spiral that is actually happening right now. Personal spending month over month is expected to fall from 0.7% last month to 0.2%. Wow. Personal spending, durable goods orders, these are things that affect GDP and affect GDP estimates. 70 to 73% of GDP is comprised of durable goods, personal spending, people spending money. So if people are not spending money, the same way as they were before, yeah, that's a problem. If people stop spending as much money, we would have already been in a recession by now. Maybe after Christmas, people did slow down. And maybe we're in for a weakening period ahead. Chicago PMI comes out at 9:45 in the morning, pending home sales as well at 10 o'clock in the morning, pending home sales year over year. And then at 10:50 on Thursday, 10:50 a.m., you're going to get Fed Bostic, Fed Goolsbee that will speak, and Kansas Fed Composite Index, Kansas Fed Manufacturing Index, and that's pretty much it for your Thursday. You will get some manufacturing PMIs coming out of China Thursday night. Something to watch, but I don't think it's going to be a huge deal overall. And then on Friday, if you thought Friday was going to be a chill day, you thought wrong. S&P Global Manufacturing PMI will come out for February. But your biggest data on Friday will be ISM Manufacturing PMI, expecting that to actually get a little bit better from 49.1 to 49.5. And then final numbers for the Michigan Consumer Sentiment for February. 10:15 in the morning, Fed Waller that speaks, and 12:15 p.m., you will get Fed Bostic and then Fed Daily at 1:30 p.m. So holy moly, that is your weekly earnings calendar. Took a long time to get through, to be honest, and we didn't even break down each and every single kind of thing coming out, just the important parts. There's a lot of data coming out this week. Consensus is economy weakening, higher inflation. Literally, stagflation is what this data could show us this week, and that would be bad news for the broad markets, just everything. Now, for Tesla stock this week, given all of the bullish kind of option activity positioning you're seeing, I think it's going to be a very important week, and I expect a big move in Tesla stock as well. If you look at this trend line from the 175 low over the past 2.5, 3 trading weeks or so, you've bounced right at about this level. Right now, it's at about 190. Tesla stock bounced there as well. On Friday. It did not continue to fall. That's great news. If you fall under this downtrending line, you could fall back to at least this mid target around 185, if not back to the high 170s. That would be my expectation for this week if the data does indeed show a stagflationary kind of environment that we're heading into, where growth is slowing down and PCE does rise. Ultimately, I think the beginning of the week could be stronger than the end of the week, because if you get durable goods orders coming in light, if you get PC or if you get your GDP report on Wednesday and durable goods on Tuesday showing the economy slowing down, that's gonna potentially drive bond yields lower on your 10-year treasuries, that could be good for Tesla. It could be good for Tesla to start pricing in a higher chance of a rate cut in May. The question really is, does PCE Thursday come in hotter than expected? We've seen all of your other inflationary reports recently coming in hotter than expected by a long shot. PPI came in way hotter than expected. CPI, way hotter than expected. Does PCE follow that same trajectory? If it does, we could be looking at 0.5% PCE month over month. That's 6% annualized on a year, on a kind of extend that out on a 12-month basis. That would be a massive, colossal problem for Tesla and for the broad markets. And I would expect Thursday and Friday could be very, very red. So, I mean, if you're looking at statistical probabilities, we've had CPI, we've had PPI. They both came in hotter than expected. PCE may come in hotter than expected. I think if there was anything to bet on, that would probably be the bet to make. Inflation comes in hot, economic data comes in weak in the beginning of the week. End of the week could be redder than the start of the week. So I think the start of the week, Tesla stock could start to make its way, especially if the data comes in weak, maybe up to about 207, 210. That would be my highest end expectation, unless we get any kind of news that comes out for Tesla. But I do think by the end of the week, we're probably going to find ourselves about where we are now. I think if we get a rally in the beginning of the week, a lot of that's probably going away on Thursday and Friday. If PCE does come in line with expectations or slightly lower, then I think markets will love that. And I think Tesla may just continue higher into, the 210 level. And that's where I would expect Tesla stock could end the week. But it's that PCE report that really has me stumped. I don't know, where Tesla's going to go before that. But I mean, I think the broad markets are going to get hit if PCE comes in that strong. On the downside for this week, I would be targeting about 180, potentially the high 170s. I think, again, 180 continues to be strong support. So I think 180 sounds more logical here. I actually do think there's a greater chance of larger downside this week just because of that PCE report. But again, I wouldn't be surprised if Tesla stock shot up into, the 200s in the beginning of the week, Monday, Tuesday, Wednesday, as you get economic data that comes in a little bit weaker than expected. And we're expecting, really bad economic data, let's be honest. The markets might love that in the beginning of the week. Thursday and Friday wouldn't surprise me to see some pretty big sell-offs in the broader markets. So let me know what you think about this information. Again, I do just want to point out the S&P really does look like it's going to reset here. I think you are due for a correction. I think that's all it will be. I'm not expecting some kind of huge crash here, but some people are. Let me know what you think about this information down below in the comment section. Let me know if you are hedging your portfolio, if you're bullish, if you're bearish in this upcoming week for Tesla stock. Again, I am bullish in the beginning of the week. I think if you are bullish in the beginning of the week, you are trading some options. If you do have leverage exposure to the upside in Tesla right now, I personally would look to hedge that or reduce some of that exposure heading into Thursday, because Thursday is going to be a bit of a shit show, to say the very least. And again, on Thursday, Tuesday and Thursday, or Tuesday and Wednesday, you might get Fed speakers giving us a little bit of a heads up on what that PCE report could look like on Thursday. If it's really going to be that bad, I'm sure the Fed is going to brace the markets for that. If they do that, then that's a bad sign for Thursday. And potentially, bad sign for the markets as well. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. If you guys want to come trade with us live in real time, be prepared for any potential market outcome that we do get this week. Check that link out down below in the description of this video. You guys enjoy the rest of your day and night, and I will see you in the next one.